Hey, I'm Bayan. I am your fit accountant, and today I'm just going to give you a high level of what you should know about your business and taxes. So, would you believe how many people don't have a good grasp on their finances and taxes? The average business owner looks at their bank account and sees if there's money there, they're like, great, we're done, right? Which it's a start, but that's totally wrong if you're trying to grow the business and you're trying to be in business more than a year, or some might even argue more than 6 months, right? Every business owner should know their numbers and should have a good grasp on their taxes. This is where your CPA comes in. Your CPA can help navigate you through the financial statements. These are the set of documents that you do need to know and be comfortable with to see how your business is doing. So the most popular one is your profit and loss statement. That pretty much has your income and your expenses. So if you have a business, anything to run the business ends up on your profit and loss statement. If the income is more than the expenses, you're in profit. If the expenses are more than the income, you have a loss, right? So what I always tell my clients is that a profit and loss statement is more theory and cash is fact. So the other statement is the balance sheet. This one shows what you have and who you owe. So your cash, hopefully that's a lot, and you have your accounts receivable, that's who owes you. So hopefully money that's coming in eventually if you chase after them. And also inventory, if you sell any goods, you need to buy those goods and those sit on your balance sheet until you sell them, which then when you sell them, they move on to your profit and loss statement. And then you have who you owe. So that's your liabilities. It could be anywhere from your vendors, people who do things for your business that you have to pay within 30 days, 60 days, sometimes 120 days, or you have long-term liability, and that's maybe the bank you owe a mortgage for the building that you bought for your business, or you have a vehicle that you financed for your business. So you would have to pay that over a certain period of time. Anything over 12 months is a long-term liability. And then you have your equity or your retained earnings. And hopefully this is years and years of earnings that you've accumulated versus hopefully it's not a deficit. But that's what makes up the balance sheet. And then the last statement, or I would say the most important statement, one of the most important statements that a lot of business owners aren't even aware of is the statements of cash flow. It exists. And the statements of cash flow is pretty much what the heading, the title says. It shows, it has a roadmap of where your cash is going. So operating cash, that is cash that is coming through your operating business, so sales, and then people that you pay out or vendors that you pay out that comes out of your operating cash flow. So there's increases and decreases, but your operating cash, that's one section of the cash flow statement. So you know what cash is coming in through the business via sales, and you know what cash is going out because you're paying expenses. That ultimately affects your profit or loss. Then you have your investing cash. This is items that you would purchase to help your business. So for example, you need equipment, you need a vehicle, you need a building. These are all things that you're purchasing for your business, or if you sell assets and money comes into your business. So remember the point that I made, most business owners check their bank account. If the money's there, they're happy. So this statement of cash flow, what it does, it shows the roadmap of what's coming through operating, what's coming through investing, and last but not least, what comes in through financing. Financing is if you are doing something that helps fund the business or you're paying out something. So let's use a simple example, a loan. You get a $100,000 loan from the bank, you finance your business. That's cash coming in. So in your bank account, the cash could go up, but you owe that money at some point. You have to pay the piper. And you paying that cash out, that also is cash. That's cash coming out. So those three parts are the main parts of a cash flow statement. Now, these three financial statements, they're available to you. A CPA can put these together, a bookkeeper can start off, and the CPA can review it and make sure that you know and you're aware of what's happening to your business and what your numbers are. So that's the accounting and finance side. What about the taxes? The reason I kept taxes for last is because every tax return, every business tax return starts off with financial statements. You need a set of financial statements to file your taxes. So if you go to your CPA and you say, hey, I would like to file my tax return, just look in the bank and see what's going on, that's going to cost you a lot of money because you're going to make your CPA do a lot of work. Now, if you're proactive and you have the right CPA, that CPA can make sure your books are in order. You know your numbers. So at the end of the year, planning has already been done and all you're doing is filing your taxes, but you know you're as tax efficient as possible. A tax return starts with the profit or loss from the business, and then it has adjustments, which then you either owe or you get a refund. The best tax returns, as I call it, is the one that you owe very little or you receive very little from Uncle Sam, because that way cash is staying in your business and you're not outlaying cash that you didn't need to. So all in all, you need a good strategic advisor, which for most people in their business is an accountant, a CPA. A CPA understands the language of business. As you've all heard, accounting is the language of business. So if you find yourself the right CPA, you can know your numbers, you can know how your business is doing, you can make decisions based on those numbers, and you have a good grasp of what's going on and will ultimately help your taxes because you're taking the right deductions, you're making sure you're reporting the right revenue, and therefore you're paying the least amount of taxes possible. I'll give you one example. Goldman Sachs, as you've probably heard in the news, is laying off over 3,000 of its employees. Now, you're probably like, why are they doing that? Well, every business, at the end of the day, if you can't raise sales, meaning you can't increase the income that's coming in, you have to look at your expenses and see what you could lower. So a big expense of a company like that is employees. So unfortunately, they look at certain part of the employees and say where they have to cut down, and that's reducing their costs, which of course increases their profitability because that's something they can control. So as a business owner, if you don't know your numbers, how would you know to do something like that or make a business decision that could ultimately save your business, create more profits, which technically means more cash in your pocket, assuming you collect. So do me a favor, if you like this video, please press the subscribe and like button, and I'll put out more content like this. This is your Fit Accountant, and I can't wait to talk to you soon.